This week, the Fed will finally be dropping its highly anticipated interest rate decision. I was just reading this article in The Atlantic the other day saying, quote, the job market is hell right now. I know it's tough out there, guys. I seem to be getting more and more informational requests from current students at my MBA program. Hopefully, the expected interest rate cuts will help get things moving if you are in that camp. Meanwhile, stocks are taking off. Google just hit a $3 trillion valuation. The indices are pushing new all-time highs. Let's talk through a couple of economic game notes ahead of this interest rate decision, as well as what it means for your portfolio. It all comes down to the labor market data. Last week, we got revised numbers from last fiscal year. The original number was 1.8 million jobs added. That was revised down by half to roughly 900,000 jobs. The first 5 months of this fiscal year, April through August, aren't looking any better, pacing at about the same as those adjusted numbers from last year. We also got jobless claims data last week. Jobless claims are sitting at a 4-year high currently. In sum, the labor market is absolutely softening, driving hopes of an interest rate cut and really causing the market to rally in the last couple of weeks here. Let's take a quick look at some of the other economic indicators that the Fed has to consider. We just got a really important inflation print last week, which basically fell in line at 2.9%. Unemployment is at 4.3%, and GDP growth from Q2 was 3.3%. In sum, none of these numbers are going to dissuade a rate cut based on what we're seeing out of the labor market. Let's talk stocks. If you are watching your portfolio, this is generally a good sign as there are numerous benefits a company will receive from a rate cut cycle, including higher valuations. There's also increased access to capital, lower borrowing costs, higher market confidence, and overall economic stimulus. Hopefully you're already seeing this play out in your portfolios as the market has been rallying on rate cut expectations. Based on the data, we see the rally continuing through the rest of 2025 with the potential for at least one more rate cut either at the end of October or mid-December. As always, keep us posted on any game notes that you have on the stock market and the economy and how you see things playing out. Be good.